What if I told you that 90% of traders fail not because they lack knowledge, but because they cannot control what happens inside their own minds? Today, we are diving deep into the revolutionary psychological strategies of Dr. Alexander Elder, a legendary trader who also happens to be a trained psychiatrist. This unique combination gives him insights that most trading educators simply cannot provide. We will explore his powerful psychological framework that has helped countless traders transform their approach to the markets. You will discover how to create an unshakable trading plan, learn the importance of using stops and profit targets, and understand Elder's famous 2% and 6% rules that protect your capital from emotional destruction. We will also examine his triple-screen trading system, which is a method specifically designed to help you think strategically while avoiding the emotional traps that destroy most trading accounts. These strategies are not just about improving your technical trading skills, but about fundamentally strengthening your mental game in the markets. This is about creating true discipline, managing your emotions effectively, and making smarter and more confident decisions when money is on the line. Trading success is not about finding the perfect indicator or the secret setup. It is about mastering the psychological warfare that happens between your ears every single day. In the first section, we will examine what Elder calls the 3 fundamental pillars of trading success. These are the 3 M's that form the foundation of everything else: mind, method, and money. In the world of trading, strategies come and go like passing fashions. Indicators flash their signals with promises of easy profits. Charts tell stories that seem familiar until they suddenly don't, and markets move in patterns that appear predictable until they shatter your expectations without warning. But at the heart of all consistent trading success lies a trio that Dr. Alexander Elder has distilled into one timeless and powerful concept. These are the 3 M's: mind, method, and money. Together, they don't just shape your trading approach. They literally shape your entire future in the financial markets. Let's dive deep into each one of these pillars, because understanding them will revolutionize how you think about trading forever. The first pillar, which Elder calls the foundation of all trading success, is the mind and your trading psychology. Dr. Elder begins with what he firmly believes is the most critical pillar of the 3, and that is the mind and your psychological state. He doesn't sugarcoat this reality one bit when he tells us the harsh truth. Most traders fail not because they didn't understand what a moving average crossover signal meant, but because they simply could not manage what was happening inside their own heads during critical moments. The 4 emotional forces that destroy traders are fear, greed, hope, and ego. These 4 emotional forces are like violent storms that batter every single trader who enters the markets, and unless you learn to weather these storms properly, even the most sophisticated trading system in the world will completely let you down. Elder, drawing from his background as a trained psychiatrist, explains that many traders unconsciously bring unresolved emotional baggage directly to their trading desk every single day. One day, it might be the desperate and overwhelming need to win and prove themselves. The next day, it could be the crushing and paralyzing fear of losing money again after a string of losses. In both cases, these emotional states lead directly to impulsive and completely irrational trading decisions that destroy accounts. He emphasizes that the key to developing a proper trader's mindset is what he calls emotional discipline. This is not about eliminating emotions entirely, which would be impossible anyway, but about recognizing these emotions when they arise and then responding to them with complete control and awareness. You don't fight fear by pretending it doesn't exist or by trying to ignore it completely. Instead, you face it directly, you understand where it comes from, and you learn not to let it hijack your trading decisions in critical moments. Elder shares this profound truth with all traders. No trading method, no matter how sophisticated or back-tested it might be, can save a trader from himself and his own emotional weaknesses. That's precisely why the mind comes first in his framework. Until you can completely detach your self-worth from each individual trade's outcome, and until you can take a loss without losing your emotional cool, you are simply not yet ready for the brutal reality of the financial markets. Moving on to the second pillar, we explore what Elder calls your trading method, which is your system, but definitely not your salvation. Once your mind is properly prepared and in the right psychological state, Elder shifts the focus to the second foundational pillar, which is your method. This represents your actual trading strategy, how you read and interpret market conditions, what technical indicators you choose to trust, and what specific setups you decide to trade. Elder doesn't dictate any kind of one-size-fits-all trading system to his students. Instead, he emphasizes the critical importance of developing a logical, consistent, and thoroughly testable approach that aligns perfectly with your individual personality and your personal risk tolerance levels. His own trading method includes various tools like trend-following indicators, momentum oscillators, and his famous triple-screen trading system, which is a sophisticated technique that filters potential trades through multiple time frames to dramatically increase their reliability and success rate. But what's more important than any specific technical indicator is the trader's ability to follow the rules they have set for themselves with unwavering discipline. Elder warns strongly against what he calls system hopping, which is the destructive habit of jumping from one trading method to another every single time a trade fails or a losing streak occurs. Instead, Elder urges all traders to develop a comprehensive set of rules they can trust completely, test those rules thoroughly over extended periods of time, and then stick with them religiously even through the roughest patches and most challenging periods. But once again, he reminds us that even the best trading system in the world becomes completely useless in the hands of an emotionally unstable trader. That's precisely why method is the second pillar in his framework, not the first one. Without proper psychological preparation, even the most profitable system will fail. The third and final pillar focuses on money management, which Elder describes as the shield that protects your precious trading capital. Finally, we arrive at the third fundamental pillar, which is money, or more precisely, money management and risk control. Dr. Elder is absolutely clear about this point. Risk management is not optional for successful traders. It is absolutely essential and non-negotiable. He compares trading without proper money management to playing Russian roulette with your entire investment portfolio. Even a genuinely great trader will inevitably face losing streaks at some point in their career. This is a statistical certainty that cannot be avoided. But what separates the long-term winners from the eventual losers is precisely how they manage and control those inevitable losses when they occur. Elder strongly recommends never risking more than a small percentage of your total trading capital on any single trade, usually somewhere between 1 to 2% maximum. This way, even a really bad trade won't completely wipe you out financially, and you'll still have enough capital remaining to stay in the game when the next great opportunity presents itself. He also speaks extensively about proper position sizing techniques, strategic stop, loss placement, and the important psychological benefit of keeping your position sizes appropriately small. When your position size is too large relative to your account, fear takes over your decision-making process completely. When your position is sized just right according to your risk parameters, you can remain completely objective and make rational decisions. Risk control, in Elder's comprehensive view, is what allows you to survive in the markets long enough to eventually thrive and become consistently profitable. Elder insists that these three fundamental pillars are not interchangeable in any way. The order in which you address them matters tremendously for your long-term success. You must start with preparing your mind first, then build and refine your trading method, and only then can you properly apply money management principles. If you miss that crucial first step, everything else will eventually crumble beneath you. In his own words, amateur traders focus obsessively on how to enter trades and find the perfect entry points. Professional traders, on the other hand, focus primarily on how to manage themselves and their risk exposure. That's what Elder calls the fundamental difference between amateurs and professionals. That's the heart of lasting trading success that stands the test of time. In the next section, we will examine what Elder calls emotional discipline, which he describes as the inner war that every trader must win. Imagine stepping into the financial markets with what appears to be a solid and well-tested trading plan. Your charts are properly set up. Your strategy has been back-tested thoroughly, and your profit targets are clearly defined. But then something fundamental changes, and it's not happening in the market itself, but rather inside your own mind. Your hand begins to hesitate over the mouse button. Your heart starts racing uncontrollably. You find yourself cutting a winning trade far too soon, or even worse, you cling desperately to a losing position, hoping and praying for some kind of miracle reversal. Does this scenario sound familiar to you? Dr. Alexander Elder, with his unique perspective as both a successful trader and a trained psychiatrist, calls this destructive pattern exactly what it is: self-sabotage. According to Elder, emotional discipline is the only real antidote to this self-destructive behavior. The first step in developing this discipline is avoiding self-sabotage, which Elder describes as the trading trap that we set for ourselves. Elder doesn't mince words when he addresses this critical issue. Most traders fail not because the market beats them in any direct way, but because they systematically beat themselves through poor emotional control. They fall into predictable emotional traps, behaving completely irrationally during high-stakes moments when clear thinking is most important. For example, they hold on to losing positions for far too long, stubbornly refusing to accept that they made a mistake, praying desperately that the trade will somehow turn around. Or they do the complete opposite, selling a winning trade far too early because they're afraid that their gains might slip away if they don't lock them in immediately. Elder draws a powerful and truly humbling comparison when he explains this phenomenon. He says that trading errors are remarkably similar to addictive behavior in many ways. Just like alcoholics who are destroying their lives, losing traders often know perfectly well that what they're doing is harmful to their financial future, but they continue doing it anyway. They rationalize their poor decisions. They repeat the same destructive cycle over and over again, and they suffer the inevitable consequences without learning from their mistakes. Elder suggests that the path to healing and recovery begins with complete awareness of these patterns. Just like the first step in addiction recovery is honestly admitting that there's a serious problem, the first step in developing trading discipline is acknowledging that you are completely capable of sabotaging your own trading success. Once you can accept this uncomfortable truth, you can finally begin to change these destructive patterns. He even parallels the proven structure of Alcoholics Anonymous, encouraging traders to create specific rules, daily routines, and accountability systems that keep their emotions in check during trading. This isn't just a clever metaphor that sounds good. It's actually a practical roadmap to rebuild your entire relationship with the market and with yourself as a trader. Next, we examine the twin forces that hijack your mind, which Elder identifies as fear and greed. Two powerful emotions dominate every single trading day, and these are fear and greed. Fear can be completely paralyzing when it takes control of your trading decisions. It keeps you from entering trades, even when your proven system is telling you to take action. It makes you move your stop-loss orders tighter just to feel a little bit safer. It whispers dangerous thoughts like, "What if this trade fails just like the last one did?" In that critical moment, the overwhelming fear of losing money again drowns out all logic and rational thinking. On the complete flip side, greed seduces you into making terrible decisions like overtrading your account. It pushes you to completely ignore your risk management rules. It tells you convincing lies like, "You found the golden goose setup, and you should bet really big just this one time." But that "just this once" mentality is often exactly what brings a promising trading account to its knees. Elder doesn't tell traders to try to eliminate fear and greed entirely, because that would be completely impossible for any human being. Instead, he teaches traders to recognize these powerful emotions when they arise, and then to consciously choose not to act on them impulsively. But how exactly do you accomplish this difficult task? The answer is by sticking religiously to predefined rules that you wrote when your mind was calm and clear. Rules that are written before emotion enters the room have tremendous power. When the market is calm and your mind is completely clear, that's when your comprehensive trading plan should be created. Then, in the heat of the moment when emotions are running high, your only job is to follow that plan exactly, not to follow your feelings or impulses. This kind of emotional self-discipline is definitely not natural for most people. It takes consistent training and practice, but it's exactly what separates seasoned professionals from emotional amateurs who blow up their accounts. Another major psychological trap that Elder identifies is the dangerous fantasy versus reality, which creates the illusion of easy money in trading. One of the most damaging emotional traps, according to Elder's extensive experience, is what he calls fantasy. This is the seductive dream that trading is somehow an easy and quick road to riches. Many new traders are drawn into the markets by this dangerous illusion. They see screenshots of massive profits, expensive cars, and complete financial freedom. They think to themselves, I can definitely do that too, and it looks so easy. But Elder sets the record completely straight about this fantasy. Trading is intellectually simple to understand, but emotionally brutal to execute consistently. It's not about memorizing chart patterns or mastering complex technical indicators. It's about mastering yourself and your own psychological weaknesses. He warns strongly against the dangerous delusion that trading is some kind of quick money scheme. That fantasy only leads to reckless decision-making, oversized position-taking, and completely shattered expectations. The reality is that genuine success in trading demands hard work, unwavering discipline, and tremendous emotional endurance. Just like any other serious profession, whether it's medicine, engineering, or professional sports, trading requires many years of dedicated learning and literally thousands of hours of practical experience. The faster a new trader accepts this uncomfortable truth, the quicker they can begin to grow into a professional. The encouraging news is that emotional discipline is definitely a skill that can be learned. Elder leaves all traders with genuine hope when he explains his belief that emotional discipline is not some kind of natural gift that you're either born with or not. It's actually a learnable skill that must be trained like a muscle through consistent practice. He encourages traders to start journaling, writing down exactly what they felt during each and every trade they take. He advises setting clear rules and sticking to them religiously, even when every bone in your body wants to break them. He promotes regular self-reflection, daily routines, and a sense of complete personal responsibility for every single trade taken. Because, in the end, charts don't make trading decisions for you. You make those decisions. Dr. Elder's message is crystal clear. If you want to win in the financial markets, you must start by winning the psychological battle within yourself. Master your emotions, and you unlock the most powerful edge any trader can have. Not some secret indicator or magical system, but true emotional discipline. In the next section, we explore mass psychology and market behavior, where Elder explains that the crowd never thinks, it only reacts. The market is much more than just numbers flickering on a computer screen. Behind every single candlestick, every price spike, and every market collapse, there's raw human emotion. There's fear coursing through the veins of sellers. There's greed driving the actions of buyers. And at the center of it all, there's the crowd, which is millions of individual traders and investors acting together. Dr. Alexander Elder reminds us of this powerful truth. The market is a living, breathing organism made up of people, millions of people who act together, often in completely irrational ways. If you want to become a consistently successful trader, you absolutely must understand this fundamental concept. The market is psychology in motion and nothing else. Elder explains that the market is essentially a mirror of human emotion. At its core, Elder says the market is a place of consensus and agreement. The current price of any stock, currency, or asset represents an agreement, a momentary truce between buyers, sellers, and those who remain undecided. But here's the important twist that most traders miss: that consensus is extremely fragile and can shift dramatically in just seconds. This happens because people aren't machines that operate on pure logic. They're emotional creatures who react to news, to rumors, to chart patterns, and to each other's behavior. When emotions flare up, prices move accordingly. Elder encourages traders to see price not as some magical number that appears randomly, but as the direct expression of collective psychology and emotion. When buyers feel confident and optimistic, prices rise naturally. When fear creeps into the market, prices fall just as naturally. Understanding this emotional undercurrent and learning to read the crowd's mood can give any trader a tremendously powerful edge. Now we come to one of Elder's boldest and most important principles, which is trading against the crowd and mastering the art of thinking independently. Elder teaches that you simply cannot succeed by following the crowd blindly. The crowd is driven by emotion rather than logic. The crowd chases trends, buying at the top and selling at the bottom. The crowd panics when things get scary, and if you blindly follow them, you will panic too. Elder teaches traders to respect the crowd's power because they can definitely move markets, but not to fear them. The crowd can move markets, yes, but their behavior is often predictable and repetitive. Just like a child touching a hot stove again and again, the market crowd keeps making the same emotional mistakes over and over. If you can learn to spot those predictable patterns, you can trade against them and win consistently. But to do that successfully, you must be emotionally and mentally prepared to stand alone. You must have the inner strength to buy when others are afraid and to sell when everyone else is shouting about prices going to the moon. That kind of contrarian thinking isn't easy or natural for most people. It feels unnatural and uncomfortable. But Elder says that's exactly what separates truly great traders from average ones. The ability to think independently, even when everyone else is swept up in euphoria or despair. Elder offers a beautiful metaphor when he talks about price oscillations, which he describes as the pendulum of emotion. He likens market prices to a pendulum, and you should think about that image for a moment. The pendulum swings back and forth from one extreme to the other. At one end is complete panic. At the other end is pure euphoria. But the center, that's where true value actually lives. Prices rarely stay centered for very long. Instead, they swing back and forth, driven by crowd emotion, moving too high or too low. And that's precisely where opportunity lives for smart traders. When the pendulum swings too far into fear, people sell blindly without thinking. That's when Elder suggests it may be time to start buying. When it swings into greed and everyone is drunk on profits, it may be time to step back or sell. This rhythm of emotion, this back and forth movement, isn't just market noise. It's actually a predictable pattern. Elder's counter, trend trading approach is built around understanding and exploiting this pattern. He trains his eyes not on where the crowd is right now, but on where they'll likely swing next. It's not about catching exact tops or bottoms, which is impossible anyway. It's about understanding that extremes always correct themselves. What goes up too fast always comes down. What crashes in fear often rebounds strongly. When you learn to read those emotional swings, you don't chase the crowd. You anticipate them. Your job as a trader is to observe, not absorb the market's emotions. Don't get swept up in the crowd's excitement. Don't share their fear. Watch it, study it, and use it to your advantage. Elder teaches that the best traders are like skilled psychologists with a price chart in their hands. They don't just look at technical indicators. They look at what those indicators reflect about crowd behavior. Are people panicking and selling everything they own? That might mean a bottom is near. Are they euphoric, throwing money into anything that moves? That could signal a top is approaching. Elder's philosophy of mass psychology is both a warning and an opportunity. It's a warning because the crowd is dangerous. It reacts emotionally, irrationally, and destructively. But it's also an opportunity because crowd behavior is not random. It follows predictable patterns. If you can stay calm while others lose their heads, you can use those patterns to your advantage. Dr. Elder doesn't ask traders to become emotionless robots. He asks them to be aware, to learn how the crowd moves, and to be brave enough to go the other way when it matters most. That's the true power of emotional mastery in the market. That's the art of trading with and against the crowd. In the following section, we delve into record-keeping and self-reflection, which Elder calls the invisible edge of great traders. In trading, most people chase the flashy things. They want the hottest stocks, the perfect setup, the secret indicator that will make them rich. But Dr. Alexander Elder teaches that the true edge doesn't come from something flashy or exciting. It comes from something quiet, disciplined, and often completely overlooked. This is record-keeping and self-reflection. Elder goes so far as to call it the fourth pillar of trading, right alongside mind, method, and money. Without it, he warns, even the best strategies will eventually collapse. The trading diary serves as your mirror in the market. Let's face the truth, Trading is not just about what happens on the chart. It's about what's happening inside you when you take that trade. That's why Elder insists that every serious trader should keep a detailed trading diary, a living document that captures your decisions, your emotions, and your reasoning. Think about it this way. Every trade is essentially a test of your skills. But if you don't write down your answers, how will you ever learn from your mistakes? How will you even know what you're doing right? Elder advises traders to document absolutely everything about their trades. Why did you enter the trade? What was the specific signal? What was your goal? How were you feeling at the time? Were you confident, nervous, or rushed? What happened after you entered? Did you follow your rules, or did emotions interfere? When you begin to track not just your trades, but your thinking and emotional state, something powerful happens. You start to see your own patterns clearly. You notice when you act out of fear or when you ignore your plan in a rush of greed. Once you become aware of these behavioral patterns, you can finally begin to correct them. Elder doesn't just recommend keeping records, he builds an entire philosophy around it. One of his most striking statements is, "Show me a trader with good records, and I'll show you a good trader." Why such strong words? Because good records show that a trader takes their craft seriously. They show that they're not just gambling, but that they're thinking, learning, and improving. A trading diary isn't about achieving perfection. It's about accountability. When you document your process, you're forced to face your own behavior honestly. You can't blame the market. You can't chalk it up to bad luck. You have to own your choices completely. Taking full responsibility is what Elder considers the hallmark of a professional trader. Self-reflection isn't just about journaling. It's about radical self-honesty. The market doesn't reward excuses. It doesn't care about your good intentions. It only cares about your execution. If you lose money, the natural reflex might be to say, "The news ruined my trade," or "I just got unlucky this time." But Elder challenges traders to look much deeper. Was your position sized correctly? Did you follow your rules? Did fear, greed, or boredom push you off course? By taking 100% responsibility for the outcome, whether you win or lose, you take your power back. You become an active participant, not a victim of circumstances. When you do this consistently, you don't just become a better trader. You become a more aware, more grounded, and more resilient person. The path to continuous growth is what makes Elder's record-keeping philosophy so beautiful. It transforms trading from a series of random events into a structured learning process. When you keep good records, you can go back weeks, months, or even years and see how far you've come. You can revisit your biggest mistakes and recognize how much more control you have now. You can pinpoint the exact moments when your discipline broke and prevent those moments from repeating. More importantly, you start building a database of self-knowledge, not just about the market, but about yourself, your strengths, your blind spots, and your emotional triggers. This is how amateur traders transform into professionals. Not by guessing better, but by reflecting deeper. Your trading journal becomes your best teacher. Dr. Elder doesn't promise that keeping a trading journal will instantly make you profitable, but he promises this. It will accelerate your learning curve like nothing else can. It will show you truths that no mentor or indicator could ever reveal because it's based on your real trades, your real emotions, and your real growth. So ask yourself, are you willing to write down your thoughts before every trade? Are you ready to confront your habits after every trading session? Because that one quiet step of recording and reflecting could become the loudest turning point in your entire trading journey. In the next section, we explore psychological challenges and solutions, focusing on winning the inner game of trading. Trading, at first glance, looks like a game of charts and numbers. But Dr. Alexander Elder makes it crystal clear, it's not just about technical indicators or perfect setups. The real battle is internal. The toughest opponent you'll ever face is yourself. Elder explores the core psychological challenges that destroy most traders and provides practical, heartfelt solutions to overcome them. Because if you can't manage your own mind, no strategy in the world will save you from failure. Fear of placing orders represents the freeze before the fight. Let's start with something many traders won't admit out loud, the fear of pulling the trigger. Elder says it plainly, Many traders hesitate to place trades even when all their signals are perfectly aligned. They freeze. Why does this happen? Because placing an order means stepping into the unknown. It means putting real money and ego on the line. What if you're wrong? This fear, Elder explains, is not irrational. It's completely natural, but letting it control you will paralyze your progress. The solution isn't brute force. It's confidence built through proper preparation. That's why he recommends backtesting. When you see that your strategy works over hundreds of past trades, your brain starts trusting it. Starting small is crucial. Trade with position sizes so small that you can afford to lose them without emotional pain. That's how you train yourself to act despite fear. The goal isn't to eliminate fear completely. The goal is to act despite it, because your system gives you confidence and your risk is controlled. Overconfidence after wins represents the hidden danger of success. Now flip the coin. You win a few trades. You're flying high. You start to feel unstoppable. Then you make a reckless trade. You break your rules. You size up too big. And boom, you lose not just money, but clarity. Elder warns that overconfidence is just as deadly as fear. In fact, it often feels worse because it comes wrapped in the illusion of control. This happens most often to beginners. They think a winning streak means they've figured it all out. But Elder teaches that trading is probabilistic. A few wins don't mean you're a genius. They just mean variance is smiling on you for now. The solution is humility. Elder urges traders to celebrate wins quietly. Stay loyal to the process, not the outcome. Avoid raising stakes just because you're on a roll. Discipline must remain constant, whether you've just lost 5 trades in a row or won 5 in a row. That's the sign of a true professional. The losing mentality involves emotional traps that keep you stuck. Here's a tough pill to swallow, Elder says. Many traders don't just lose trades, they live with a loser's mindset. What does that look like? Doubling down on losers, hoping they'll reverse. Cutting winners early just to cover the red. Holding on to losing trades with the fantasy that they'll come back. These behaviors aren't logical. They're emotional traps rooted in fear, denial, and ego. They compound losses faster than any bad setup ever could. Elder's advice is to get ruthless with bad habits. Pulse, cut losers quickly. Your first loss is often your smallest. Let winners breathe. Have a strategy to trail them, not kill them. Never rescue a loser by sacrificing a winner. You're just reinforcing bad behavior. Above all, stop trying to be right and start trying to trade right. Ego is expensive in the markets. Discipline is profitable. Self-awareness is the key to mastery. Elder circles all of this back to one big truth. Self-awareness is your greatest asset as a trader. If you don't understand your own triggers, your fears, your emotional cycles, and your thinking errors, you're trading blind. The market doesn't just expose weaknesses, it punishes them. But when you start to notice your own behavior without judgment, just awareness, you begin to take control. You can pause, reflect, and adjust. That's where real transformation begins. It's not about never making emotional decisions. It's about recognizing them fast and learning from them. The good news is that you can train your mind just like you train your strategy. The more honest you are about your emotional challenges, the stronger and calmer you become. Because in the end, success doesn't go to the smartest or the fastest. It goes to the one who can keep their cool, stay aware, and stick to the plan when the pressure is highest. In the following section, we examine the long-term perspective, treating trading as a marathon, not a sprint. If there's one message Dr. Alexander Elder emphasizes again and again, it's this: trading is not a quick money game. It's a profession, a craft, and a lifelong journey. In his words, the best traders don't chase profits, they chase excellence. Because when you trade well, the money eventually follows. But that takes perspective. A long-term one. Short-term greed versus long-term mastery is a crucial distinction. Too many traders come into the market with the wrong mindset. They think of trading like a slot machine. Put in a few bucks, pull the lever, and hope for a jackpot. Elder calls this a dangerous illusion because markets aren't casinos. They're battlegrounds of discipline and psychology. New traders often get trapped in short-term thinking. How much can I make this week? If I just hit one big trade, I'll recover all my losses. Let me double this account fast and walk away. This mindset leads to overtrading, oversized positions, and emotional chaos. It may produce lucky wins, but almost always ends in long-term losses. Elder urges a different question. How can I become a consistently good trader? Because consistent quality, not flashes of luck, is what builds lasting success. Think like a marathon runner. Elder compares successful traders to marathon runners, not sprinters. Sprinters burn fast and fade early, but marathoners pace themselves, conserve energy, and stay focused on the long road ahead. The same applies to trading. You don't have to win every day. You don't have to catch every move. What matters is that you're still standing, still learning, and still growing year after year. This mindset shift changes everything. You stop overreacting to losses. You stop chasing every new fad or strategy. You start measuring success in terms of discipline, not just dollars. Because over time, consistent execution outperforms reckless ambition. Trade well first, the profits will follow. One of Elder's most powerful principles is deceptively simple. Don't focus on making money. Focus on trading well. When you chase money, your decisions get clouded by emotion. You take trades you shouldn't. You move stops. You gamble. But when your focus is on quality execution, following your rules, managing risk, and learning from mistakes, you start building something real, something sustainable. It's like a good athlete. They don't aim to break records every time. They aim to perform their best. The wins come as a result of consistent training and mindset. Continuous learning is essential for the lifelong student. In Elder's world, the best traders never stop learning. The market is always evolving. New instruments, new patterns, new behaviors. If you think you've mastered it, that's the moment the market will humble you. Elder recommends making study a daily habit. Read market books and trading psychology insights. Backtest your systems regularly. Watch the charts, not just to trade, but to understand behavior. Journal your thoughts, trades, and emotions. He also encourages listening to experts, but with a critical mind. Don't follow anyone blindly. Evaluate what works for your personality, your system, your goals. Take wisdom from others, but filter it through your own experience. Longevity comes from structure and self-awareness. Here's the truth. Most traders don't fail because of lack of knowledge. They fail because they burn out. They blow up accounts. They emotionally exhaust themselves from chasing quick wins and shortcuts. Elder shows a better way. He teaches you to build a structured process, a method that suits your style, a money management plan that protects you, and a psychological toolkit that keeps you grounded. You repeat that process with calm focus and curiosity, day in and day out. That's how you survive the dips. That's how you grow through the plateaus. That's how you turn this craft into a career. Dr. Elder's long-term perspective is more than just advice. It's a philosophy, a call to treat trading not as a quick hustle, but as a discipline worth mastering. If you can slow down, stay curious, and trade with patience, you'll find something far better than a lucky streak. You'll build a foundation that lasts, a mindset that withstands pressure, and a career that doesn't just make money, but makes meaning. In the final section, we explore key psychological strategies, understanding that trading is 80% psychology and 20% method. Dr. Alexander Elder doesn't just teach this principle, he lives it. In this section, we explore core psychological tools Elder recommends to every trader serious about long-term success. These tools bring structure, reduce emotional interference, and protect your capital from your own impulses. The first strategy is to develop a trading plan, which serves as your psychological shield. Let's begin with the foundation, a written trading plan. According to Elder, trading without a clear plan is like sailing without a compass. You'll be tossed around by waves of greed, fear, and impulse. A trading plan, one you've written down, gives you a calm center when the market gets stormy. This plan should answer key questions. What setups will you trade? When will you enter? How will you manage the trade? When will you exit, win, or lose? The magic here is not just in having rules. It's in having them before the trade begins. When your mind is clear and rational during a trade, your emotions are loud, but your plan, that's your quiet, logical guide. The second strategy is to use stops and profit targets as discipline in action. You've heard it before, but Elder makes it non-negotiable. Always use stop-loss orders. Why? Because stop. Losses aren't just financial tools. They're emotional safety nets. They free you from second-guessing, from hoping and praying, from watching a losing trade spiral out of control. Stops define your risk up front so you can accept it and move forward with a calm mind. Equally important are profit targets, because greed can be just as dangerous as fear. Set a realistic exit point for gains. Let it be part of your plan. Most importantly, stick to it. This disciplined structure prevents your emotions from hijacking your decisions mid-trade. The third strategy involves the 2% and 6% rules, which are emotional survival tactics. Dr. Elder's 2% and 6% rules are psychological armor disguised as risk management. The 2% rule states, never risk more than 2% of your total account equity on a single trade. The 6% rule states, if your total losses for the month hit 6%, stop trading for the rest of the month. Why does this matter? Because trading isn't just about surviving bad trades. It's about surviving bad streaks. ARFing, everyone has them. But emotional traders, blinded by revenge or desperation, blow up accounts trying to recover too fast. Elder's rules keep your losses small, your emotions contained, and your focus intact. They allow you to pause, reset, and return with clarity, not chaos. The fourth strategy is the triple screen trading system, where psychology meets strategy. One of Elder's most famous contributions is his triple screen trading system. While it sounds like a technical setup, and it is, its true power lies in its psychological impact. Here's how it works. Use a higher time frame, like weekly, to define the overall trend. Use a middle time frame, daily, to look for a setup in that trend's direction. Use a lower time frame, hourly, to time your entry. This multi-time frame approach forces you to pause, cross, check, and think strategically, reducing emotional impulsivity. It also filters out noise, helps avoid false signals, and aligns your trades with higher probability trends. That's not just smarter trading, it's emotionally safer trading. The fifth strategy is to avoid guru traps and be your own expert. Perhaps one of Elder's most grounded pieces of advice is, beware the gurus. He cautions traders, especially beginners, against blindly following so-called market experts who often make more money selling courses than trading. One striking example he shares is his deep dive into W.D. Gann, a legendary trader many hold in high regard. Elder interviewed Gann's own son, who revealed that Gann wasn't the market wizard people believed. He barely made any money trading. The lesson is clear: don't worship anyone. Be a skeptic. Study what works. Test it. Trust your own analysis over charisma or hype. The market doesn't care who your guru is. It only responds to discipline and logic. These strategies work together as a complete system. Your trading plan protects you from chaos. Your stops and targets protect you from second guessing. The 2% and 6% rules protect you from disaster. The triple screen system protects you from impulsive entries. Avoiding guru traps protects you from false hope. Together, they form a psychological fortress, allowing you to trade with confidence, clarity, and control. Because in the end, success doesn't belong to the most talented. It belongs to those who can stay calm, stay focused, and stay in the game. These are the psychological strategies that separate the professionals from the amateurs, the survivors from the casualties, and the winners from the losers. The journey to trading mastery is not about finding the perfect system or the secret indicator. It's about developing the psychological strength to execute your plan with discipline, manage your emotions with awareness, and protect your capital with wisdom. These are the tools that will serve you not just in trading, but in every aspect of your life where clear thinking and emotional control matter. Remember, the market will always be there, ready to test your resolve and challenge your discipline. But with Elder's psychological framework, you'll have the tools to meet those challenges with confidence and emerge stronger from every battle. The question is not whether you'll face psychological challenges in trading, but whether you'll be prepared to handle them when they arise.